Hey there, homeowners. Thinking about refinancing, but not sure if it's the right move. I'm Courtney Thornell, and today we're diving into the ins and outs of refinancing, when it makes sense, and how it can really pay off in the long run. All right, let's be real. Your mortgage is probably one of the biggest financial commitments you've got. So it's no wonder refinancing can seem like a big, daunting decision. You might be asking yourself, is it really worth the hassle? Or what's the benefit of swapping out my current mortgage for a new one? I get these questions all the time. And the truth is, refinancing can be a game changer if you do it for the right reasons. But I also know some of you are hesitant to refinance because you don't want to start your 30-year mortgage all over again. Refinancing at a lower rate and resetting the clock with a 30-year mortgage will lower your payments even more. But for those of you who don't want to reset the clock and want to eventually pay off your mortgage, you don't have to start from scratch. There are refinancing options available with shorter terms like 25, 20, 15-year loans. That way you could still take advantage of the lower interest rate without resetting your mortgage back to 30 years. Imagine the savings you can see both in terms of interest and time with one day not even having a mortgage. It's all about finding the right fit for your situation. Okay, let's break it down. There are a few key reasons why people tend to refinance, and I'm going to walk you through them with some real world examples. So whether you're looking to lower your interest rate, pay off some debt, or even take cash out for a big project you've been planning, refinancing can put you in a better financial position. All right, first up, lowering your interest rate. This is one of the most common reasons people refinance, and for good reason. If you're in a higher rate than where the market is at now, lowering your interest rate could make sense and possibly save you hundreds of dollars per month. If your credit has taken a little bit of a hit and property value is down from when you entered into your last loan, then you might not be able to take advantage of a lower rate, but that's where talking to a loan officer like myself will come in handy to determine what is beneficial for you. So I was working with a gentleman and he was already in a low rate at the time, but he had the opportunity to save about 1/8%, which would have saved him around $50 a month, which isn't huge, but for him, $50 was $50, and why wouldn't he want to save $50 a month? Again, it's all about what makes sense for you. Another reason for refinancing is to pay off debt. This is a big one for those of you who might be juggling high interest credit cards or personal loans. And even if your current mortgage is at a lower rate than the new rate you might refinance into, it still might make sense to refinance. All right, let's do an example. For sake of ease, I'm just going to round my numbers accordingly. So let's say you are in a loan with the original balance of $350,000 and your interest rate is 5.5%, and your monthly interest and principal and interest payment is $1,987. You've been in the loan for 2 years and you've paid off $9,112 towards the principal of your loan. That means you have a remaining balance on your loan of $340,808. Now, let's say you have a Chase card with an $8,000 balance and a monthly minimum payment of $200. You have a Citi card with a $6,500 balance and minimum monthly payment of $170. Let's say you also have a MasterCard with a $9,000 balance and a $220 a month minimum monthly payment. And let's throw one other card in there. You have another Chase card of a $1,400 balance and a minimum monthly payment of $35. That's a total of $24,900 in debt, with minimum monthly payments totaling $625. So with your principal and interest payment and your monthly credit card payments, your total monthly payments are $2,612 per month. Now with the refinance and enough equity, you can roll any closing costs associated with the loan into your new loan amount. So you don't have to come out of pocket with closing costs except for usually the appraisal and possibly the credit report. So, okay, back to the calculations. If you have a mortgage balance of what we previously mentioned of nearly $341,000 and you add the around $25,000 in liabilities, and let's say you have closing costs of about $6,000, your new loan amount would be $372,000. So let's pretend rates went up a little bit and your new rate is at 6.25%. Your new monthly principal and interest payment would be $2,290. With what you were paying monthly with your high interest credit cards to what your new payment would look like without the credit card debt by rolling it into your mortgage, you would be saving $322 per month. That's even with a higher mortgage rate. Who wouldn't want to save $322 a month? I know I would. Or guess what? If you were comfortable with what your monthly payments were before and you don't need an extra $322 a month, you can still refinance and take that extra $322 in monthly savings and put it towards your mortgage payment every month and pay off your loan sooner. It's a win-win if you ask me. Okay, finally, let's talk about taking cash out. This one's for those of you looking to fund a big project like a home renovation or even investing in something new or pay for your kids' college or go on a vacation. Imagine you've been dreaming of remodeling your kitchen or adding an extra bedroom or building an ADU, which is an accessory dwelling unit, by refinancing and taking the cash out and tapping into your home's equity to fund these projects. Using funds for home improvements can be a smart way to increase your home's value down the road. All right, now that we've covered the why behind refinancing, the big question is it right for you? Refinancing can offer some serious benefits, whether you're looking to lower your interest rate, pay off debt, or take cash out for a big project. But like any big financial decision, it's important to weigh the pros and cons and consider how it fits into your long-term goals. Every situation is unique, and if you're still unsure, I'd love to help you figure out if refinancing is the right move for you. So feel free to reach out and let's chat about your options, whether it's saving money or consolidating debt or taking advantage of some of your equity. We can figure out the best path for you financially. So as always, feel free to drop a comment or question below. I'm here to help. Thanks for watching, and don't forget to like, share, and subscribe. I'll see you next week.